Hello, everybody. Welcome to our webinar today. I see that there are still a couple of people joining in. So before we get started, I'll introduce myself. My name is Laura, head of growth at Tokenize.it. At the end of the presentation, you'll see a slide with my contact details. If you have still questions or if you want to provide feedback or want to get started, feel free to reach out. I'm also going to send the recording of the webinar and the slides to anyone who signed up. So no need to take any notes. Yeah, and I think with this, we can get started. Again, welcome to our webinar. Today, we're going to learn about token-based fundraising with a focus on private offers. I'm super happy to introduce you to the CEO and founder of Tokenize.it, Christoph Jentsch. In the next 40 minutes, Christoph will take us through the webinar. If you have any questions, post them in the Q&R part of Zoom. I'll collect them and have Christoph answer them at the end of the session. And with this, I am handing over to Christoph. I have to give him the host.
So now I'm back. Hello. So great to be here. Today talking about how to use Tokenize.it or the GmbH token for private funding. So last time we spoke about employee participation. So in the beginning there will be some overlap, but the rest will be very particular to how to raise a round. So I hope you can see my screen. So let's start. So last year, according to EY, there were about 6 billion euro invested in German startups. It's always depending on how you count it, so it's a rough estimation. So it's a lot of money. It should be more, of course. But where can you as a startup founder get money from? So you can raise from friends and family. That's very often the very first round, or if you want to call it a round, basically just to get started. Also, business angels are very helpful, especially coming also with their expertise. This is all before you have a product, often even before MVP. It's ideal when you're still at a stage where you have a good idea, you maybe have found your co-founder and want to get started. After that usually comes the VCs, but there's also another very important part or group which you can raise from, which is your community or your customers. Often maybe at a later stage, but maybe you can actually start, you're building a product within an existing community and you want to raise from them directly. Retail investors in general, and I mean, the list goes on, you could even name more, but I just want to point out that it can be more than just a classical VC. There are many more potential groups you can raise from. What you should always bear in mind is your cap table basically joins you in your vision. You form a cap table, and all those have an incentive to make this project successful. So you should choose wisely, especially in the beginning, who you let into your cap table or who can help you. Sometimes actually a community, even though it might be hundreds of smaller investors, is the most helpful because they can give you feedback to your product. They are the ones you use to build your product on. So yeah, choose wisely. If you let in your cap table, look for investors with real added value, especially in the beginning, who do not only bring money. So how can you raise money? Many people use a convertible loan, in German Wandeldarlehen, as a very first form of an investment contract. The next one is a capital increase or Kapitalerhöhung in German, where you actually go to the notary and someone gives you capital in your company, Eigenkapital in German. This is maybe a little bit later, but you can also do it, of course, you do it at the founding stage, but it's the next stage after convertible loan. Loans in general can be given, although in startups, this is a very high-risk field. It's unusual to get higher loans because you don't have the collateral to back this up. Token investments, rather new, and we have seen them now since about 2016, and we'll talk about today how they can work in a legal way, in a compliant way in Germany. Some choose to do something like a product pre-sale, for example, Kickstarter, where you promise early adopters to be the first one to get a product and they're already paying for it before you actually have the product. So those are different ways of fundraising. We don't want to speak about every one of them. We'll focus first on those classical or traditional methods of convertible loans and capital increase, and then we will look at token investments. So the agenda for today? Well, traditional ones, we speak about them. Then we speak about the GmbH token, what it is from a legal and technical point of view. We will give some sample calculation for both. And then we will talk about regulation for a moment. And in the end, I will give you a short demonstration of how it works in the product, and we do a Q&A in the end. So traditionally, let's start with a convertible loan. This is actually a loan with interest and maturity date. So very standard. But the difference is the conversion is possible in the next capital increase. Instead of a repayment that the lender gets the money back, they will get actually shares. So the money you owe them may be used in the capital increase to receive actual shares. Most convertible loans come with a cap and a discount. So cap means a valuation cap, at which price per share they are paying in the capital increase. Often also a discount, especially if you're raising at your cap, or so that they are always paying less than the investor will pay, which comes in the later round. So for convertible loan, there is no formal company valuation necessary, although the cap is economically speaking similar. But the cap is not a company valuation. It's basically just saying you will never pay more than this price per share. But at the time when you issue the convertible loan, you don't need to do a formal company valuation. Of course, the convertible loan is not simply transferable like a token is, or even shares to some extent. Technically, there's some discussion about this if you need to go to the notary for convertible loan. Practically, almost no one is doing it. So the notary appointment often comes only at conversion. But there is a risk for investors. So when you speak to, depending on which lawyer you're speaking to, technically, the existing shareholders can prevent a convertible loan owner to convert. So let's say 6 months or 12 months later, there's a capital increase and he wants to convert now. The shareholder can deny approval. Why is it working? Why is it still working in most of the cases? Well, if they deny approval and they don't give shares to this convertible loan owner, technically they have to pay back the debt, the loan. Normally, the company doesn't have the money for it, so they would go into bankruptcy. So they, of course, do it, but it is still very risky, because if the company actually does have the money and it significantly increased in valuation during those 6 or 12 months after you signed a convertible loan, then there is a risk for this investor that he just gets his loan back plus interest, but actually cannot convert because the shareholders do not agree. That's why lawyers recommend to even sign convertible loans at a notary. But if you're doing this, then you can just do a capital increase right away. So it's not standard to do it right now, but there is certainly a risk for those investors. So, but a convertible loan always leads to a capital increase. So you go to the notary, pay the fees, depending on how much you raise, and the details can easily cost you 30K. For smaller rounds, it's often 5K. Again, it depends on a lot of details. Their investors become actual shareholders, including voting rights. And after that, every major decision in the company needs a formal shareholder meeting that they have to approve the things you're doing as a CEO or founder of the company. Those shares are only transferable at a notary. So they are written in the commercial register called Handelsregister in Germany, and they're not easily transferable, not as easy as tokens or, let's say, stock from an AG. And at that point, you do need a company valuation, because you have a fixed price per share you're giving out at a capital increase. Okay, let's do a simple calculation on an example. Let's say you have a founder who owns 25,000 shares. That's usually what you do when you start a GmbH. So then Alice invests about 100,000 euros using convertible loan with the terms 5 million cap, 20% discount, interest of 5%. So those are usual terms. So 1 year later, Bob comes in and invests 1 million at a 10 million pre-money valuation. So that means 400 euros per share. And he's doing this through a capital increase. At that moment, the convertible loan of Alice is converting. So the loan is now 100K plus 5K in interest at a 5 million valuation, because this was the agreed on cap. So this means 200 per share. So for those 105,000 euros, with 200 per share, Alice is getting 525 shares. And Bob receives 2,500 shares because he's investing 1 million and 400 euros per share. Notary costs roughly 5K. So how does it look like? At foundation, founders 25,000 shares after the capital increase. Only then it changes, because the convertible loan is not actually changing the ownership in the company. So Alice getting 525, Bob 2,500, and they get their corresponding shares. So after that, we have 28,025 shares. This is how normal, let's say, funding round math works. So what are the advantages of convertible loan? First, it's very fast. You just sign a contract. You can do it right away when you meet the investor. So it's sometimes some founders go, like when they go to conferences, they take those contracts with them so they can immediately sign them if there's an opportunity. If applicable without the notary, I mentioned there are some risk with it. But if the capital increase comes pretty quick after you sign a convertible loan, it's usually okay to do it with notary, but some lawyer would disagree. So, of course, and also the disclaimer, I'm not a lawyer or tax advisor. So if you have questions about this, you need to get your own advice. So initially, there's no additional cost. So only in the event of conversion, you have to pay for notary fees. And there's no formal valuation required, although the cap is, economically speaking, very similar. So what are the disadvantages? First, some founders don't really think about this, but convertible loans do not dilute each other. In a capital increase, every time an investor comes in, he dilutes the previous investor. Convertible loans are signed, you could say, in parallel, and then they convert all together. So they are technically not diluting each other, which I once had a round where there were, I think, about 10 investors coming into a convertible loan, and the founder was pretty surprised by how much shares were left for him. He didn't think about how much he actually gave away because they did not dilute each other. So also in the case of a down round, let's say in our example, Bob would invest at a 2.5 million valuation. Then those convertible lenders receive significantly more shares, because at that valuation, at that price, their money, let's say in that case, in our example from Alice, 105K converts. So this is not the case if you would do a capital increase or token investments, because they would just go down in value if there's a down round. Not so for the convertible loan investor. And as interest and maturity date, which is a little bit unusual if you think about investment, because you want to give money to buy shares in a company, but here you are giving a loan with interest and you have a maturity date. It's just different. So, and there's some legal uncertainty if you don't go to notary. So shareholders technically can reject the conversion. And they are not transferable. So no secondary market is possible for them. What are the advantages and disadvantages of a capital increase? So the advantages, of course, those investors become real shareholders in the commercial register. So you have decades of case law about all those edge cases. So investors usually feel very certain they know what they have. You also get information and voting rights. I put this here in between, good for the investor. Some founders don't like it, depending on how you look at it. So what are the disadvantages? Of course, you have to go to the notary and pay the fees. And it's always a process of going there. It's time, it's money, and they are not easily transferable, because always you have to involve the notary if you want to do any changes in the cap table. And you do need a formal company valuation. So this is just how it is currently, traditionally, how most funding rounds work. Now let's look at what the GmbH token is and how it can be used for fundraising. So what is the GmbH token legally? Legally, it is a participation right. In German, we say Genussrecht. So, and the owner of this right gets dividends, exit participation, liquidation proceeds, and an information right. So this means, economically speaking, a token holder is exactly on the same footing as a shareholder. There is no economic right a shareholder has, which a token holder doesn't have. Plus, and this is the last one, is put option. The token holder is allowed to give the token back to the company and has a pathway to receiving actual shares. So the company can decide if he pays them out, the investor, at the current company valuation, or if they make them an offer for GmbH shares, which is similar to the convertible loan, the most reasonable thing to do. So Yeah, so this means the token holder has economic rights as a shareholder and can convert. This is what it is legally. What is it technically? Technically, it's a so-called ERC20 token on Ethereum mainnet. ERC20 is just a technical standard how the token works, so it's compatible with existing wallets or blockchain infrastructure in general. The token is a simple balance who has how many tokens. So we are using Ethereum mainnet, if you want, as an similar like to an alternative digital commercial register. So the Handelsregister or the commercial register is where you have your actual shares, and the Ethereum blockchain is where you have your token-based. Let's call them virtual shares if you want. You have some additional functions to this token. So there are some admin rights for the CEO. They can mint tokens to create them. They can burn them or destroy them. There can be an allow list if the CEO chooses to, so that only a certain addresses are allowed to send or transfer those tokens or hold them. You can have lockups for investors that when they invest into the company, they have a certain amount of time where they cannot transfer the token. And you have vestings for employees that they basically earn their token over a certain period of time. With those tokens, you technically have access to the complete DeFi ecosystem. So you can technically use them as a collateral to get yourself a loan. So there are some protocols out there doing this. And there's lots of innovation and things happening right now in the DeFi ecosystem, which you now can be a part of with your token. Now, how do you link those legal rights to this token? So those rights, so first and foremost, you do have an investment contract, which is very common, and your bookkeeper or tax accountant knows how to deal with it. But there's a certain risk that if you have a chain of contracts, meaning if your token holder sells the token and he sells it to another one and to another one, you have this, the tokens get traded, then there is a risk that the rights of the token or the rights in the token fall apart because someone is technically transferring the token, but not legally entering into an investment contract for some reason. And to avoid this and to give 100% certainty that the token holder always have this participation right or those economic rights I'm speaking of, we did something called a public reward, or in German Auslobung, which means the company is publicly promising that whoever is doing a certain action that you can only do as a token holder is rewarded with those participation rights. So think about it similar as, let's say, I would say, if someone solves this mathematical puzzle here, he gets 1 million euro. Then the counterparty doesn't need to sign, but I can sign this document saying whoever solves this problem gets 1 million euro, and I'm legally bound to it. Similarly, here the company says whoever sends the token back to the company will receive this put option. Whoever is holding the token and calls this function a smart contract, which is a trivial act on a platform, is rewarded with dividends. And with this, you don't need to rely on some chain of investment contracts, which you can never really prove if all of the contracts are like valid entered into. You can rely on this public reward or Auslobung from the company. So with this, the tokens and rights are inseparable, which is extremely important. So now let's do a sample calculation with the GmbH token. So in a commercial register, the founder owns 25,000 shares. Alice invests 100K using the GmbH token. And so you have a pre-money valuation of 5 million euros. And Alice is paying 200 euros per share and receives 500 tokens. So financially speaking, it is very similar to a capital increase. There's no real difference except of they have GmbH token and they're not shareholders in the commercial register. So now the post-money valuation is 5.1 million. Now, 1 year later, Bob comes and invests 1 million at a price of 400 euros per GmbH token. This would now correspond to a 10.2 million pre-money valuation because there are already tokens around, which we are taking into account. So, which if there would be not just Alice, but let's say 10 or 100 other investors, they would all dilute each other. The one who comes later dilutes the one who came former. So now with 400 euros per share or per token using the GmbH tokens, Bob received 2,500 tokens, 0 notary costs. So in the end, you have this at the foundation, 25,000, then Alice comes in with 500, and then you have 2,500 for Bob. There's no interest to be paid. It's actually way more simpler to be done. There's no conversion math. You have to think about convertible loans. You can think of every single investment, financially speaking, similar to a capital increase, which happens individually. So what are the disadvantages of the GmbH token? Well, the offer includes a company valuation, as you would do with a capital increase. If you really do not want to have this, you could still go back to using convertible loan, and we have a template for you, which includes that those convertible loans can be converted into tokens instead of actual shares in the commercial register. A digital wallet is required. So we are giving on our platform users who do not have a wallet yet, which they bring an embedded wallet, which is very simple to use with a Google login or something similar. But you do need, because it's a non-custodial platform, Tokenize.it, meaning you do need a digital wallet to hold your tokens. And since the method is not really common, you do require some explanation. You have documents for this you can give to your investors and founders or employees, which explains everything about the GmbH token, but it's not as common or used as the normal share, so you do have to explain something. But what are the advantages? So you have one asset for all stakeholders, meaning friends, family, business angels, VCs, community, customers, retail investors. You can use the same asset for them, and they can technically even trade them. You have economic equality with shareholders for all of those stakeholders. And there are very few, let's say, employees who have VSOPs or some other programs who really economically on the same footing as shareholders, receiving everything from dividends to liquidation proceeds to exit participation. And that is a very important part and makes those tokens economically very similar to stocks, which are traded on a stock exchange. They're easily transferable since they are an ERC20 token on Ethereum. So this enables a secondary market. And there's some secondary security token exchanges where you can list those tokens and trade them. There's no notary required at any point in the process. This makes it possible that it's completely digital. So the complete process from the giving out of the offer to like closing it, paying it, receiving the tokens, everything can be handled on the platform. Everything is digital, and that makes for a very nice UX and smooth process. This tax optimized is out of scope for this webinar today, but if you look at the last webinar, we spoke about employee participation. I talk more about how the token can be used for employees and how this is, from a tax perspective, the most ideal way of doing it. If you want to learn more about this, here's a link to a blog post which speaks about this from a tax perspective. Okay, so then let's talk about regulation. It is, if you do a private or any kind of investment offer, technically you have the obligation to publish a prospect, except, and then comes a list of exceptions which are published by the BaFin, and I will just name some of them here and then talk about two. So one is, if your offer is to fewer than 150 investors per EU member state. So this means a non-public offer. This usually involves family, friends, business angels, VCs, and so on. So you don't need to have a prospect if you talk to them or make this offer only to very few people. If you want to make it public and speak to way more than 150 investors, then you can raise up to 8 million euros per year with a key information document, in German Basisinformationsblatt, or in short BIP. There are some more requirements to it. You need a broker, a licensed broker. This is something we also offer as Tokenize.it. This will come in the next webinar. We speak about it as crowd investing. So other exceptions is if offers less than 100,000, if it's only to accredited investors, we raise at least 100,000 per investor. If your offer is registered by a SWAM financing service provider, and some more details. So if you want to look at the details at the link, you can look at this and read it for yourself on the website of the BaFin, to the German finance regulator. Let's speak about the two which are most relevant for us. One is this fewer than 150 investors. That's what I want to show you today. We call this private offer. On our platform, Tokenize.it, you can have a personalized invitation to known persons to invest under specific conditions. So you create on a platform, let's say this is our price per token, where you can easily calculate the company valuation, the range the investor can buy from, let's say between 10 and 100,000 or more. The expiration date, how long the offer will be valid, and so on. So you make a very specific offer for a very specific person or entity and send out a link, and this person or entity can then just completely close this deal or give you the money and gets the tokens. Easy. So this is something you can do already. The other one, which we just are launching right now, is up to 8 million euro with a BIP as a public offer. This allows you to invite really anyone. Of course, sanction checks, there's some lists, some people you cannot allow to invest, but most people. But by having a simple invest now button on the website or sharing it on social media. And here we require this audited security information document, BIP, which is about 3 pages long, so it's not too complicated to do. And the distribution happens through a licensed investment intermediary. For example, Tokenize.it, which is acting as a tied agent under the liability umbrella. So this would be the crowd investing product. We will speak about this in the next webinar. So now it's showtime. Let me show you how to do a private offer, and then we come to the Q&A. So 1 second. Hope you can still see my screen. So this is a Tokenize.it app. You have to first connect with your wallet, or we also allow a Google login. Google login is powered by Web3 Auth, where we do create an embedded multi-sig in the backend. For those who want to know more about this, please have a look in our documentation. So I'm using this now for simplicity's sake. So I'm logging in with my Google account. And I'm skipping here now the onboarding as a company. That's mostly giving company information when you first set up your company or tokenize it. It's all completely free. You only pay once you actually have an investment which gets closed. So when you log in, you're seeing in a second, your token pool, meaning you have still, this is just a test account I'm having here, 91% of your tokens to offer, which are not created yet, and some are pending offers. You can see the amount of tokens you're allowed to offer. This amount needs to get, you need to get a permission from your shareholders to issue a certain amount of tokens. And then you can create private offers, vesting plans for employee and crowd investing as a CEO because you have a permission from the shareholders. So let's now do just this one example of a private offer. So if I want to create this private offer, I first have to decide how many tokens the investor can buy. I can go for a range or a specific amount. Let's say I go for a specific amount. I'm allowing this investor to get exactly, let's say, 100 tokens. I can choose the investor's payment method. You can use stable coins, such as USD or USDC. In that case, the investment happens immediately. It's like an atomic swap. The money comes in, the token goes out. Or you can just use a bank transfer. So then you would have here your bank information included. So let's say I will use USD for that in that case. Here's the price per token. So I'm choosing now 1,000 USD. This means the investor can invest 100,000 euro because I offered him 100 tokens. So I can now select the duration, how long this offer will be valid. Let's say I choose 1 month. That's the time he can close this investment. And here I choose a name for the investor. Let's go with Max Mustermann, just as an example. If I want, I can ask the investor to do an ID check using our partner ID Now. Since this is now a private offer, you can also say, I don't need this, because if you're sitting with this person on the same table, or if you just met to do this deal, you do not have to use ID Now. You can also KYC the person yourself. If you want, you can choose a lockup. During that period, if you set a lockup duration, the token cannot be transferred. So basically, it is stuck in a smart contract, and only after a certain amount of time, the investor can get a token out. So I'm choosing none of this. So then I see the summary. The summary will be, I have 1,000 euros per tokens. It is here calculating the company valuation. It's saying 25 million. This comes from the knowledge that we know we have 25,000 shares in the commercial register. One token is always economically equal to one company share. This means 1,000 euro per token is meaning a token-based company valuation of 25 million. So token investment, we allow him to buy 100 token. This means 100,000 euros. You see the expiration date when the offer is not valid anymore, exact timestamp. The platform fees, we are taking a 2% token fee. In that case, it would be 2 tokens, and 2% in cash. In that case, would be 2,000 euros. So with this, you can agree and create a private offer. And now you're getting a link, and this link can be sent to the investor. The investor will then see your offer financially. The investor will also see the legal documents. And if the investor agrees, he can commit to it, pay in that case in USD, or if you choose just euro, then he will see your IBAN and can do a standard SEPA transfer to your bank account. you have then to confirm that you received the money, and once you confirm, the token gets created in the wallet of the investor, and the investment is closed. So it's a very simple, straightforward digital process. Okay, this was the demo. Then thank you very much for attending the webinar. I hope it was very helpful for you. If you have any further question, you can contact Laura at Tokenize.it, and she will help you, and we would be happy to help you for your next fundraise. Thank you very much. Have a great day. Bye.